Hello and welcome to today's market update. Today is 3rd of October. You're looking at a daily chart of S&P 500. S&P 500 had a very good day. It was up 2.59% to close at 3,678. More importantly, there was no follow through from Friday's decline. You can see this red candle which was formed last Friday. This was bearish and that had pushed it below the mid-June lows. But good thing was there was no follow through. It opened higher and it remained strong throughout the day. The reason for the rebound was what was happening in the bond market. So let's quickly have a look at the bond market and see what's happening, and then we'll come back to the stocks. So let's start off with the Fed funds futures for April and then March. These were basically unchanged ever since they closed around 4.45. Both of them are around the same level, and because they are close to where the Fed expects the terminal rate to be, around 4.75 sometimes in middle of next year, so they're kind of going sideways. They did trade as high as 4.70, but since then they've pulled back a little bit. Now they're kind of going sideways, but most of the action was in the 2 years and 10 years. So let's look at 2 years. 2 year was down 16 basis points today to close at 4.12. You can see that it had a very sharp run up last week, up to last week, and then since then it's been kind of consolidating with a slight downside bias. It had risen as high as 4.36, and then it's now slowly moving lower, but still within striking distance of where the Fed expects the Fed funds rate to be by the end of December. Federal Reserve said that at this point they expect the Fed funds rate to be around 4.25, but obviously the incoming incoming months will determine whether it's goes up to there or higher. But either way, the 2 year note is close to the 4.25 level. So I think it could consolidate a little bit, go sideways until new data comes in. There is going to be a key data coming in on Friday, which is the unemployment report for the month of September. That would be an important report because that would show the strength of the labor market. It will show how at what rate the wages are rising, whether or not the labor market is still very tight despite the rate increases. So, but today's 16 basis point decline was a relief to the stock market. So obviously stock rebounded from deeply oversold condition. We'll discuss what happens to stocks going forward. Now if we look at the 10-year next, this dropped almost 18 basis points to close at 3.65. It was down to almost 3.55 during the daytime, but managed to cut its loss. You can see that since rising to around 4%, it's been gradually moving lower. It's now coming down to the mid-June high of about 3.5%. So this is an important level. So we'll see whether or not it holds this level. Again, the unemployment report that comes out could have an impact on the yields, both on the 2 year, 10 year. If the labor market shows that, if the report shows that the labor market is still very strong, tight, wages are rising, we could see a pickup in yields again. But if if the report shows that the labor market is beginning to show signs of weakness, then we could see some additional pullback. So we'll see. We'll get a better read on Friday. But at least for now, it's pullback, relief to the stock market. There is room for additional pullback. We can see that momentum is kind of weakening, so there is room for additional pullback. let's see whether or not it gets underneath the 3.5% rate. The 30-year is also was down almost 10 basis point. It's at 3.67. So as long as the yields remain kind of weak on a near-term basis, so we could see some support in the stock market. So let's now go back to the S&P 500 and discuss what could happen. So obviously, there was no follow through, which was positive. It is deeply oversold, because you can see that since mid-August, it's been just going straight down. And in fact, from the last CPI report, it's just lost almost 12%. So many of the indicators are oversold. So definitely this bounce was, expected, because it was oversold. Now the question is whether or not there's further rebound follow through. Well, there is room for follow through, because if you look at the momentum indicators, stochastic is oversold, RSI is in oversold territory. Although it's got a bounce, you can see that RSI is making a higher low even when prices made a lower low. So this is a divergence. But MACD is very weak. It's well below the zero line. So it's about to make a cross, so that's positive. But so long as it remains below the zero level, momentum will remain weak. So we'll have to see whether or not the rally can last. So what are some of the areas that S&P 500 can go to? So let's look at the smaller time frame, so we'll be able to get some idea. So this is S&P 500 on a 2-hour basis. So you can see that there's a falling wedge developing, and today it managed to move to the upside. So the first area of resistance would be this level right here, last week's high, which is around 37.36. So that would be an important area if it can get through. It basically, there was a big rejection here. Above this, the resistance would be in this zone. You can see there were quite a few candles interacting in this zone. This is around 38.50, and beyond that, resistance would be right here, which is around 3900. Now, if we look on a daily time frame, 3900 corresponds to, I'll just bring the moving averages. 3900 corresponds to this area right here, this level right here. You see there's a this was the previous support zone until it was broken. You'll see that the 50-day is also going to be interacting with this level. So that would be where there would be significant challenge. But before that, obviously, it needs to get through these levels as well. If we look at SPY, just to see what the corresponding levels are for SPY, for SPY, you can see the falling wedge. The corresponding levels are 372, which is the last week's high. Then there's 382, which basically is this zone, and then finally 388. 388 obviously corresponds to the 50-day moving average, which is right here. So which would be this level right here. So it would be around this level, 388, 390, which will bring the 50-day moving average in play. So that's SPY. If we look at Qqq and Nasdaq quickly, so we'll start with Nasdaq 100. So got a good bounce of this low. Even Nasdaq didn't have a follow through from last Friday, but it sort of underperformed the other averages a little bit, S&P 500 and Dow. It actually was up 2.36%, whereas S&P 500 was up 2.59 and Dow was up 2.66. In fact, Nasdaq typically outperforms the other two averages. So so it was kind of disappointing to see that it didn't outperform. Nonetheless, The positive thing is that there was no follow through from last Friday's. Now, obviously, it is very oversold, big drop over the last several weeks. Stochastic is still in oversold territory. RSI is in oversold. You can see RSI is making a W pattern, so this is usually positive. You see something like this during market bottoms. You can see that there was a similar W pattern here, similar W pattern here. You tend to see these in market bottoms. So obviously, if RSI can go above the previous high, which was 34.15, today it closed at 35. Oh, it did close slightly above it, so that's positive. So RSI is saying that the momentum is slowly moving higher, but it still remains below the 50 level. We need to see it above 50 level for momentum to be improving, positive. MACD is very weak, well below the zero line, but it is trying to make a bottom here. So let's see coming days whether or not it can do so. So if we look at Nasdaq on a smaller time frame, just to see on a 2-hour basis. So obviously last week's high would be, so that's this one, so there would be around 11,500, and after that we have this channel which will also act as an area of resistance. So those would be the near-term resistance level. If we look at Qqq, so you can see that Qqq, the corresponding level would be 281, which would be last week's high. Then obviously the middle of this channel, and once you get through this channel, the upper end of the channel, which is around 290-ish, that's where the resistance would be. So that's on a smaller time frame. Looking at Qqq on a daily basis, it too had a bounce today, no follow through. So if it gets up to this level, 290, that's where the resistance would be. That's where the 50-day moving average would also be coming down. So overall, it looks like there is room for bounce because they're oversold. But obviously Friday, the jobs report will provide further indication as to whether or not we make a new leg down or whether we start to form a base and start to move higher. So I think Friday, we'll get some clarity as to which way the market is going to go. So that's that for the equities. Now moving on to other areas. So let's look at dollar, for example. So this is US dollar. So dollar has been consolidating since reaching the top of this channel. It's been gradually pulling back. That's because of what's happening in the yields market. We discussed that yields on the 10-year, 2 years, they've been coming down a little bit, and that's weakening the dollar, but it very much remains within an uptrend. Even if we're to pull back to the bottom of this channel, it will still be in an uptrend. Just noticing that the MACD is about to cross here. RSI is pulling back, so there is room for additional pullback, but at this point there is no indication whatsoever that the uptrend is about to change. You can see previous times it consolidated from the top of the channel to the bottom of the channel. It consolidated right here, didn't come to the bottom of the channel, so it's entirely possible that it can head towards the bottom of this channel, and it would still remain will remain overall in an uptrend. If we look at gold, so gold had a good day ever since dollar has been weakening. So you can see that as dollar has reached the top, gold has reached the bottom, and it's been trading within this channel. So it's now broken this downtrend. So it now projects a target to this level, the upper end of the channel. So that would be around, depending upon when it goes, around 1770, 1775 level. So this is looking positive for now, for now. Momentum indicators, you can see, started to move higher. RSI is closed above the 50 level, that's good. MACD is just crossed but remains below the zero line. So, we're seeing something like this. Question is whether it can climb all the way up to the zero and then go above this. So we'll see, in coming days what happens to MACD. But if it's able to get above the zero line, that would be positive, something like this. If it goes above the zero line and stays, then you can see a sustained rally. But if it stays below the zero line, then the rally can fade anytime. But for the time being, it's looking positive. Looks like there is a little bit more room to the upside. If we look at, let's see, VIX next. Now, I want to show you something about VIX. So let's look at the line chart of VIX. So this pattern that's developing has the potential to be bearish. This pattern is, this pattern is actually similar to this pattern right here, where you see a lower high being made. Back in here, you can see that it made a lower high, and once it closed below this low, it had a big decline. So this is a very important level. The previous let's say previous close was 3018. Today it closed at 3012. So it actually closed just below the last week's low. So this is the last week's low. So we need a little bit more. I mean, it's just closed like 7 ticks lower. So I'm not sure this is conclusive. If it closes below this tomorrow, then this will confirm a lower high and lower low, similar to what happened in mid-June. So I think this is quite important because I'm beginning to see weakness in VIX. If you look at the momentum indicators, if you look at RSI started to make a lower low. MACD is still in a positive, but it looks like it wants to cross over. So this is this is potentially positive for stocks. Now, if I look at the weekly chart of VIX, this is not a very particularly bullish. If you look at MACD, MACD on a weekly basis is making a lower high. It is just at the zero line. If it crosses and moves below the zero line, that would be negative. On a weekly basis, even RSI is making a lower high. You can see that RSI is also making a lower high. So I don't see, when I look at VIX, I don't see anything positive on a weekly chart. But daily chart, I can see that there is potential for negative developments. I need a little bit more evidence. So maybe if tomorrow, if it closes decisively below last week's low of 3012, then this pattern would be similar to this, and there would be some confidence that maybe stocks can rally a few more days. But this is beginning to look bearish at the moment. Let's move on to oil. So we'll go back to the candle chart. So this is this is the oil. I mean, it was a good day today. It was up 4.5%. This is news driven. The OPEC Plus is now considering cutting output because global demand is likely to weaken because of global recession expectation. So that basically push prices up, but you can see that it's been heading lower. So until and unless we see some trend line break, we'll assume that this is within the context of the downtrend. RSI is moving higher. You can see it's making higher highs, so that's positive. MACD remains below zero, so we'll see whether or not MACD crosses and starts to move towards the zero line. I mean, until oil takes out this upper end of this channel, it would basically remain within this downtrend. So we'll see how things play out in coming days. If we quickly look at some of the indices, let's see, we'll start off with XLK. This is the technology. Again, there was no follow through from Friday, so it's now trying to reclaim the mid-June low, but there's this resistance line, downtrend line, waiting for it. It is oversold, big decline of the last 6 weeks. RSI is way below the zero line. MACD, RSI with oversold territory. So there is room for some rebound. So we could see some, follow through rebound and test this downtrend line. XLF, I think XLF looks good right here for a short-term bounce. It's forming a base at this trend line support. It closed above last week's high. So this last week's closing high, I should say. See this green candle here, it closed at 31.03. So today it closed at 31.18. So today's close is above last week's closing high. Very important. That's a important distinction. So that suggests that we could have some follow through rebound. Resistance would be right around here. If we look at XLB, this is the material sector. So that's also looking positive for a short-term bounce. Formed a base here, and today it closed above last week's closing high. So it needs to get through this mid-June closing level right here, and if it does so, then this area would be acting as a resistance. You see RSI is moving higher, MACD is about to cross, so that's looking good. Even the energy sector was up, it was up over 5.5%, gapped up, closed above this area, which was a previous support zone. So that's good, that's looking good. This downtrend line is now going to be the resistance area. If we look at semiconductor, you can see that it's been kind of consolidating at the bottom of this channel. Doesn't look particularly strong, but it was up 3.5%, oversold bounce. So there could be additional rebound. Middle of the channel is obviously going to be a problem area. There's going to be resistance around 352 right here. If we look at some of the individual stocks quickly, Tesla was obviously down a lot. It was down 8.61% on news driven. It has, we discussed Tesla that it closed below this level right here, and then it just extended its move lower. Momentum indicators we talked about was not looking good. MACD is now going below the zero line. RSI has been declining. So we've got this channel right here. The base of the channel is where we might see some reaction. So this is around 227. I mean, it doesn't have to go all the way down there, straight away. It could, rebound a little bit, but this would be where there's a demand zone. We've got this trend line from mid-June, so that would be where I would expect some reaction. Resistance, there's a gap here, so it could fill this gap and then maybe pull back. It could it's likely going to trade along with the market if Nasdaq continues, so we could see some rebound because it's down quite a bit today. But overall it's looking weak at the moment, especially the momentum indicators. Apple, so Apple had a good day today. It was up 3%. We talked about the fact that it had fallen quite a bit in a short period of time. In fact, if you look at the moving averages, it's gone well below the moving average. And when that happens, there is a propensity to get back to the moving average. And that's basically what might be happening here. So the moving average is around, the 20 moving average is around 151. So there's still about 9-point gap. So there is additional room. Apple is oversold, so there could be additional rebound. So the next area of resistance is around 149, which is right here, and then the moving average. Support is around 136, and then the June lows. If we look at Microsoft, it was up almost 3.5% today. It's now trying to reclaim the June lows. So this is obviously oversold bounce, because along with the rest of the market, Microsoft also has fallen quite a bit. So next area would be right here, around 252. So that would basically bring the 50-day moving average in play. So there is additional room. It is oversold, so we could see some follow through. If the market goes up further, we could see follow through gain in Microsoft. So we'll leave it here today. Thank you very much for watching the video.